Intel might have just saved the stock market, and here's why. They just reported earnings last week, exceeding analyst expectations. Since Thursday of last week, Intel stock is up nearly 30%. Their quarter one results, I'm just going to skim past them real quick. Their revenue hit $13.6 billion, over $12.4 billion expected. They're growing their revenue 7% year over year. Their earnings per share, non-GAAP earnings per share, hit 29 cents over 1 cent expected, and their GAAP earnings per share actually fell. I think that's due to many expenses that they had in the past, and they're just trying to pay them off. So I think that's a good sign. If they could get their earnings per share in the positive, I think that's a really good sign for their stock, and I think their stock price would follow that as well. Their data center and AI and client computing revenue hit over $12 billion, which is a 22% increase. And their outlook for next quarter is actually pretty good, projecting 14 to $15 billion, which is $1 to $2 billion more than what they projected this quarter. The AI growth. Let's just talk about what they've been doing recently. They're trying to grow their demand for CPUs and AI workloads, and that really helps drive revenue. They have partnerships with Elon Musk and 3 of his companies, Tesla, xAI, and SpaceX. They're trying to increase their data centers and trying to get a 49% stake in a fabrication facility, which would be huge for Intel, even though they're going to be spending billions and billions of dollars on data centers. I think that they're trying to be competitive in this space, and I think whoever's the most competitive in this space and the smartest with their money is going to be the one that drives their stock higher and takes over the AI business. So that was mostly it. So let's look at the stock price right now. In April of last year, when everyone was afraid of the tariff news and everyone was selling, everyone was fearful in the market, Intel was trading at only $20 a share. During that time, the US and Trump took a 10% stake in the stock at around $20 a share. So after they took a 10% stake in the stock, people drove the stock up, and in August, the stock rose to a high of $40 a share. That means that Trump's April investment doubled in value in only 4 months. But it really doesn't stop there. Since then, Intel stock has been trading in the $30 to $40 range for a few months now, for over almost half a year now. But that's until this month. At the beginning of this month, their stock was still trading at $40 a share, around that. And their earnings came out, and they came up all the way to about $80 a share, hitting their all-time high, which was also set in September of 2000. And this is something for you to think about. If you would have invested $10,000 in Intel in September of 2000, which is 26 years ago, your investment would turn into $10,100. You probably would have thought it could turn into maybe hundreds of thousands or even millions of dollars with the brand that Intel has, but their stock hasn't grown in 26 years until last week. But here's the other thing. If you were to invest $10,000 in Intel exactly 1 year ago, in April of last year, your initial $10,000 would turn into more than $40,000 today. That's $30,000 more than if you would have been invested 26 years ago. The scary thing about Intel, it took them a quarter of a century just to get to their break-even point again. That's a really scary thing, because any of these companies in the stock market can do that at any time. And it's crazy because Intel wasn't just a no-name brand, an unknown business. They were a really big known business at the time, and they still are. But it took them a quarter of a century just to get to the break-even point again. But enough of that. Intel had a stellar quarter. Their revenue was growing at 7% year over year. Their data center and AI is growing, and they're projecting a better outlook for next quarter. This is really good, and I think this is really bullish for their stock. This leads me to another thing. In the midst of all this war talk and fear in the market right now, stocks are still hitting all-time highs, even in the midst of all this fear in the market. For example, VOO, the S&P 500 ETF, just hit $650 a share for the first time ever, when just a year ago it was under $500 a share. That's a $150 increase in share price. SMH, the semiconductor ETF, just hit over $500 a share for the first time ever. And just a year ago, it was trading at $200 a share. That's over 150% increase from share price in just a year. And I've been invested in SMH for a little under a year now, and I think my return is about almost 70%. Semiconductors have been growing, and they've been growing for a while now, and I think that they're just getting started. But earnings season is coming up, with 5 of the Mag 7 stocks reporting this week. So this is a big earnings week, and this is a big earnings season, I think, for the whole market. I think the Mag 7 could either drive the market up more, or it could either consolidate. I think it might consolidate the market as well if earnings don't shape up to be how people expected. It could be a huge moment for the bulls in the market as well. Last earnings, we heard huge blowout numbers from Nvidia, and if Nvidia can have another major quarter, or even just a reasonable quarter like last time, I don't see why their stock can't keep hitting all-time highs for the rest of the year, even though their PE seems expensive at 40. I'd much rather pay a premium for the largest and arguably greatest company in the world right now than pay a discount for a terrible company. I mean, I'd rather pay a right now 40 PE for Nvidia than a 10 PE for a stock like Peloton. At the end of the day, I believe this is a very important earnings season for investors, and if fundamentals and numbers keep growing for these companies, you can expect me to keep putting in money for the foreseeable future in these stocks. At the end of the day, I believe we have a very important earnings season coming up for investors, and if the fundamentals and numbers keep growing for these companies, you can expect me to keep putting my money into all of them for the foreseeable future. And most importantly, I think AI is just in the beginning stages of their growth, and I think the growth is going to come in the next few years and maybe next few decades as well. But those are just my thoughts. Thank you for watching.